550%. That's not a typo. SanDisk stock is up over 550% in 2026 alone. This just happened, and most investors don't realize what it means yet. Here's what's really going on and what you should be thinking about right now. SanDisk is posting one of the most explosive single-year runs in the entire storage technology sector. We're talking a 550% plus year-to-date gain, a move that is turning heads from Main Street all the way up to Wall Street trading desks right now. That kind of momentum doesn't happen in a vacuum. Storage technology is sitting at the intersection of two of the hottest macro themes in the market: artificial intelligence infrastructure build-out and the global data explosion. Every AI model, every data center, every edge computing device needs storage. SanDisk is right in the middle of that equation. Retail investor volume in SanDisk has been surging. Social media chatter is at a fever pitch. The FOMO is real, and it is spreading fast. Here's the cold hard math. A $10,000 position at the start of 2026 would be sitting at roughly $65,000 right now. That's life-changing money on paper. The key word there? On paper. Moves of this magnitude historically attract two kinds of players: early-stage fundamental buyers who rode the thesis up, and late-stage momentum chasers who are essentially playing hot potato with someone else's gains. Business Insider has broken down the full story behind this rally, and the picture is more complicated than the headline number suggests. But here's what nobody is saying about this yet. A 550% move in a single calendar year doesn't just reward investors, it creates sellers. Every institutional fund that loaded up early is now sitting on generational gains with a fiduciary obligation to trim exposure. While retail is piling in at the top of the chart, smart money may be quietly distributing. That's not bearish speculation. That's how capital markets work at the end of parabolic moves. First consideration: position sizing. At this valuation level, even a 30% pullback would still leave early holders in profit. But a late entry with heavy allocation, that's a portfolio-destroying scenario. Treat it like what it is, a high-risk momentum trade, not a core holding. Second, understand the fundamental story before you touch the ticker. Is the revenue growth actually supporting this valuation? Is free cash flow expanding? Momentum without fundamentals is speculation, period. Third, if you're even considering entering here, define your exit before you define your entry. A hard stop loss isn't weakness. It's the only rational framework for trading a name that's already up 550%. 550% in 1 year. Opportunity of a lifetime, or the most dangerous trade on the board right now. What do you think this means for your portfolio? Drop it below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.